Good morning and welcome everyone to the Moneycontrol live stream. Hi, this is Nickey and you're watching the opening bell. Well, Indian equities set for a volatile day on a monthly F&O expiry. Well, earnings are expected to dictate the trend out there. If you talk about the SGX Nifty, it indicates a mildly negative start coming in for the broader index with loss of around 37 points. Talk about the US markets. Lower on Wednesday as First Republic woes eclipsed the big tech earnings. Asian stocks were trending lower at this point of time, actually mixed on Thursday. In terms of FIIs, they've bought shares worth around 1,250 odd crore, and if you talk about the DIIs, they have sold shares worth around 227 odd crore. In terms of slew of earnings that we'll be keeping a close eye out on will be Axis Bank, Wipro, Tech Mahindra, HUL, ECC and Bajaj Finserv. These are going to be some of the companies which will be declaring their March quarter and full year earnings today. But with that, let us get going and discuss some stocks and strategies today with Chandan Taparia, the head technical and derivative research at Motilal Oswal. Good morning there.
Good morning. Thanks for having me.
A pleasure is all ours. Well, it's a monthly expiry out there. What's the trend stacking out right now and the strategies that you think the participants can now look at, because it's an earning heavy week. Today also there are a slew of numbers which are slated. What do you make out of it and what is the strategy that you suggest?
Yeah, so 5 nifty companies result will be there and this is monthly expiry. The good part is we have seen good momentum in this expiry. It's up by around 4% in Nifty, up by more than 7-8% in Bank Nifty. So we have seen huge outperformance in selective banking name or Bank Nifty. We believe that supports are gradually shifting higher. However, we witnessed some consolidation, but even after that, supports are gradually hinching higher and we respected to its 50-day exponential moving average. So I believe with support of 17,666, buy on decline could continue for an up move towards 18,000. When I talk about Bank Nifty index, I believe that outperformance could continue with support of 42,400. Any dips could be bought for a swing towards 43,250 kind of level in the banking index as well.
All right, so that's the word coming in for Nifty and Bank Nifty overall. But anything that stands apart, it's an F&O expiry day. Any profitable trades out there? The stock picks recommendation that you would suggest this morning, Chandan?
Yeah, so when we talk about the stock specific, we have positive on the capital goods name. However, good momentum seen in last 2 days, but still momentum is likely to there. So we can focus on Siemens, continuously making upwards move from last 2 trading sessions, given a consolidation breakout about 3,400. So with support of 3,350, one can see an uptick towards 3,600 level. Even Cummins is other name which is taking support at the key trend line, negating its lower highs, lower lows on the weekly scale with hold near 50 DEMA. Poland flag is also visible. So with support near to 1535, this stock can head towards 1620. So Cummins is there, Siemens is there. One can focus on the name. And one name is also that is HUL, Hindustan Aeronautics Limited. So stock has come to a key level. And here we will have conditional trade. From last couple of days, it is just trying to hold beyond 2860. So this time, if it manages to hold 2860, it will open the upside toward 3000. So capital goods, defense, and selective auto name, including Tata Motors, will be on radar for the day.
Chandan, you've spoken about HUL. Let's talk about HUL because it's going to be coming out with numbers out there. It's expected to see a 13% jump both on the top line and the bottom line front. 5% volume growth is expected, but margins are expected to squeeze in a little bit because of the higher advertisement spend out there. How does the chart look like right now?
Yeah, so when I look at HUL, results are there, but the stock seems to be bottoming out at lower zone. So as of now, we have support near to 2475. And as of now, the way it has formed a bullish candle, it has potential to head towards 2580. But yes, result volatility will be there. Follow the clear support of 2475 in the stock.
Sure, and also a word coming in on Bajaj Finance. Interesting commentaries coming out from all the brokerages out there. What do you make out of it? How does the number look right? How does the chart look like right now?
So when I talk about Bajaj Finance, actually it got stuck. Some recovery was seen from lows, but momentum is missing. So I think it's likely to be in a broader range. Dips could be bought. So let it come near to 5,900 marks. So then one can look for buying with support of 5750.
Sure, I just want to give you a review of Bajaj Finance out there before I move across to Chandan and again address bunch of stocks that I expect to be moving through the course of the day. Bajaj Finance, CLSA has suggested its Kohli's aggression and drive its defense. Growth and asset quality both remain healthy, but margins should moderate in FY24. So that's the word coming in for Bajaj Finance. Very steady set of numbers coming in for this one. No disappointment delivered. In fact, steady inline set of numbers. But targets at this point of time, most of them, they've maintained that outperform rating. Even JP Morgan, for that matter, has maintained that outperform rating in the target price of around 6,600. Beg your pardon, that's for CLSA. JP Morgan, on the other hand, is a little more bullish on this one. Target price of 9,000 rupees. It says that the core AUM growth was at 29% year on year. It says that it's overall for the AUM growth, it's broad-based across the segments, and BAF, banking and finance sector, can continue to deliver over 25% growth versus the banking system, which is currently at low to mid-teens in FY24 and beyond. So that's the word coming in for Bajaj Finance. Overall, a bullish space, but let's also chat about the mid-cap IT space. L&T Tech Review, well, it's no fireworks out there, just the way we have seen for something like a Science, something like a Mastech. Persistent also to some extent, but L&T Tech Review at this point of time isn't very encouraging. JP Morgan has maintained that underweight rating on this one, and the target price has been slashed. It says that the revenue growth in CC terms for this quarter sequentially stood at 2.2%, which has missed its own guidance of 3%. Overall, it says that the FY24 organic growth, when it comes to the constant currency terms at 10%, is already baked into the conservatism in the estimates of this one. So do keep an eye out on L&T. That's the one which is interesting, but I'm going to go across to Chandan and check with him. What does he make out of the entire mid-cap IT basket overall before I kind of speak about the City Union Bank?
So when I talk about Nifty IT, actually Nifty IT got stuck in a range where bounce is not visible. But selective name, like when you talk about KPIT Tech, started to do well. Major trend is positive. Couple of days back, due to some downgrade, stock fell down, but again managing to recover. Persistence is also bottoming out. So I'll be with selective name in IT because many other stocks have seen built up of short positions. So we need to see how rollover position happens, whether the shorts are covering or not. So according to that, we'll get the sense on the number. But I believe that these stocks are already in pressure. So some sort of support-based buying could be there or some sort of bounce could be play in line with the market momentum.
All right, that's the word coming in. But Chandan, just between the space, if you can, probably put it in the pecking order, which are the names that you like the most? Something like a Mastech, does that still appeal? Scient for that matter? Because, overall the commentary for the mid-cap IT space has been largely divergent, with some of them really some of them overshooting the guidance that has been given thus far from the larger counterparts, and some of them actually undershooting it. How do you look at it? I mean, your favorite pick in that space?
Yes, I think the real and the right question you ask. So if you ask me in pecking order, I'll prefer Scient first. Major trend is positive even after the weakness in many heavyweights. This stock is holding well. If I look at the monthly chart, a textbook rounding formation is clearly visible. So slow and steady, I think momentum could accelerate towards 1250 marks.
Sure. Also, a word coming in, there are a bunch of reports coming in, a bunch of earnings today, right? Something in the likes of, also you have Axis Bank, which will be reporting number. HUL, for that matter, will be coming up with the numbers. Of course, we've discussed enough and more. Something like a Wipro and Tech Mahindra too. How do you look at it at the chart? How the chart looks appealing? Because these are larger counterparts. And if you see overall from the larger counterparts IT space, they haven't really done too well. The commentary also isn't very encouraging. What do you make out of it on the charts?
Yeah, so charts are also not showing any kind of strength or momentum. Even the Wipro has got stuck, failed to surpass his 50 EMA. Even the Tech Mahindra also doing the same. So I'll avoid, better I'll be with the name which are holding the relative strength and outperforming to generate the alpha. So better to be with those names rather than being with these names which are beaten down, and it's very tough for them to hold the bounce back.
Chandan, any trend that you're seeing on the charts which is actually a trend in terms of the sectoral sectoral which is in nature, you see hotel stocks doing well, or for that matter, sugar stocks, something in the small cap area that the viewers can be looking at right now?
Yeah, so yes, sugar stock you can keep on radar. Balrampur Chini, however, it is struggling near to 420 marks, but supports are gradually shifting higher. So I think with support of 410, one can plan for 444 kind of level. Even other sugar name are also in focus. So I think some positive to range bound bias is there in selective sugar, railway, rice stocks. So one can definitely keep these stocks and sector on radar.
All right, so we'll be addressing the markets opening just for you. Do remember it's an FNO expiry day out there, so expect some amount of volatility to play out. Overall, the bulls have been dominating the entire momentum thus far, but remains to be seen how Nifty 50 behaves. In bunch of stocks that we have been addressing includes the like of HUL, includes the likes of IT basket. Overall, the defense names which are expected, which have been in focus, and today is expected to be no different out there. Nifty 50, well, it's a flat start with a positive bias coming in for the markets right now. Look at the Bank Nifty index. Let's just see if there is some amount of support which is being lent from the Bank Nifty index. Well, we are looking at the same amount of flatness building in for the markets with somewhat negative bias coming in for Bank Nifty index. So per se, it's a nothing sort of day, just like yesterday in terms of the opening out there. But let's look at other sectoral indices to see how they've been holding up and shaping up for you in terms of reality, in terms of something like an IT sector. IT sector remains to be interesting, right? There are a bunch of reports coming in from that one. But metal first for you. Down and out with losses of 0.25% out there. It's probably the second or the third day that I'm witnessing metal index to be doing not so well. Well, we've seen some amount of encouraging data coming out of China, which led to an uptick, but right now has succumbed to profit booking. Nifty IT, well, it's holding flat with some amount of negative bias out there. Wipro is expected to come out with numbers today. Do keep an eye out in this one. IT is expected to be in focus. L&T at this point of time. The mid-cap IT space isn't very, very encouraging. Mixed views out there. FMCG index overall done and out with losses of around 0.1% out there. So FMCG basket right now also has given up some of the gains out there. Pharma index down and out with losses of around 0.1% out there. So trend at this point of time seems to be pretty lackluster with no significant momentum going on either side. Neither the bulls or the bears for that matter remains to be seen. Expect some volatility to creep in at least in the last fag end of the session given the FNO series expiry and the adjustments which take off thereon. Realty index, that's the one which is up with gains of around more than 0.1% out there. So do keep an eye out on that one. It's been auguring well. It's been shaping up well when it comes to the rate-sensitive stories. Talk about the banking, realty, auto, all of them have been holding their head in green. For bank index, it's a relatively flattish start out there, but the other rate sensitives have been doing pretty decent as compared to what we've been noticing for defensive, where the earnings relatively, at least when it comes to the FMCG basket out there, has been fairly encouraging. But what HUL really delivers today remains to be seen. Nestle India and Tata Consumer Products, these were the numbers which were encouraging. But how does HUL stack up? Volume growth expected to be at 5%, 13% growth both on the top line and the bottom line performance of the company. In terms of the margin, that might expect some amount of contraction coming in on that one. Advertisement spend may actually weigh down on the operational performance of the company right now. But actually, let's also look at the mid-cap IT names out there. L&T out there, L&T Infotech, which is expected to be in focus given the kind of mixed set of numbers that the company has reported right now. Overall right now, but if you look at the IT space, it's holding up for you. We are expected to see Wipro reporting in the numbers, and L&T Tech at this point of time has been shaping up well with gains of around 0.3% out there, despite missing the own revenue guidance in terms of the constant currency terms. Wipro, which is going to be another one from the large cap, entire counter, which is going to be coming up with numbers just to see how the commentary has been stacking up. But let's actually look at the top gainers and the top losers out there. just to see the flavor of how the breath has been shaping up for you. Well, if you talk about the gainers, well, advances and declines first. 23 advances versus 26 declines. Bajaj twins are holding up in green for you. Bajaj Finance and Finserv. Do remember the fact that Finserv will be coming up with numbers today. So a little bit in traction ahead of the numbers. IndusInd Bank too has done well in trade after the earnings out there. UPL, NTPC and Adani Ports are some of the other top gainers that we have on the list out there. Tech Mahindra is shining in green along with Coal India and Infosys. So we are seeing some amount of traction again building up for these large cap names which have been beaten down after their earnings, especially Infosys and TCS. ONGC, DRL, HDFC, these are some of the losers that we have on the list right now. Grasim, TCS and L&T. So you can see the stark difference between the numbers of TCS and the Tech Mahindra. The performance early in the morning is indicative of that divergent trend which right now is emerging out of the IT space. The one thing is pretty certain, that is the demand environment remains to be pretty uncertain. Vendor consolidation is expected to be at play. There are macro headwinds when it comes to the BFSI sector, and even if in terms of US, North America remains to be a pressure point. So all these things are weighing down overall on the IT performance of the company. But Chandan, I'm going to come back to you and ask you about what do you make out of this open right now? It's a flattish open. Banking sector really isn't really participating at this point of time. What's the strategy now with the opening?
So we are opening flattish, but the good part is supports are intact. Even we have noticed in last 3-4 days that every decline is being bought. So I believe that 17,717 could act as a support till it holds 17,777. I don't think there is concern for the market. Hold up 17,777 is buy on decline stands for 17,858, 88 level. When you talk about Nifty Bank, so that is consolidating, but supports are gradually shifting higher. So with support of 42,600, we can attempt for 43,000.
All right, so that's the one. But something like a City Union Bank, I would want to address that, and it's expected to be, it is one of the top movers that we have in the broader index. That's because RBI has approved the reappointment of Dr. N. Kamakodi, who's the managing director and the CEO, with effect May 1st, 2023 for the period of 3 days. For the period of 3 years. So that's the one that is expected to be in focus, shining and bright and green for you with gains of more than 5%. Chandan, something like a City Union Bank, does that fascinate you? Do you think we can initiate a buy on City Union Bank at this point of time?
So CUB opened positive. It negated the negative pattern on the weekly chart, and after the opening is slightly falling down. So I think this decline can be bought. Buy near to 137.38. With support of 133, again, it can go to 145, 148 levels.
All right, Chandan, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning. All right, we have a lot to talk about when it comes to the fundamentals. We have to talk about the FMCG, the IT, bunch of earnings out there which have been dominating the bulls thus far. But to join us to take the discussion forward is Deven, Choksey, the promoter of KRChoksey Group and the managing director of KRChoksey Shares and Securities. Good morning there.
Good morning, Nickey.
All right, sir. I'm just witnessing there's been a divergent trend which has been emerging out of the IT basket right now. Talk about the mid-cap IT, talk about the large-cap IT. You have names like Wipro, which will be, reporting in the numbers today, and we've already seen some amount of drubbing. What are your expectations from the sector, and how are you looking at it?
Yeah, so I think as expected, IT sector possibly is basically having some mild break as far as I think a couple of quarters concerned, largely because of some amount of uncertainty in the global environment. But as discussed in past also, my view is that IT as a service provider to most of the global corporates of the world, I would think that I think is going to be an imperative requirement, and probably I think cannot do without it. So from that perspective, according to me, Indian IT companies are likely to see higher amount of intake of orders going forward in subsequent quarters. And because of that, I would think that I think most of the IT companies would probably revise their guidance upwards in subsequent quarters. Given that situation and given the situation of correction in the price, I firmly believe that if till the time the price got corrected, if IT companies were offering 15% kind of a return out of investment, today I think IT companies are giving you an opportunity to earn around 20 to 25% kind of return out of investment. So in my viewpoint, corrected price should be used as an opportunity to buy into some of the select IT companies. Particularly some of the mid-tier IT companies, they look really more convincing than otherwise because they are niche players. They have got their contracts in place. They have got their customers growing. So from that perspective, the mid-tier IT companies, likes of LTTS, likes of SAND, likes of Tata Elxsi, they are some of the names I think which remains more convincing. Among the front line, I think Infosys, which is beaten down, and I think TCS, they look really appealing from considering into the portfolio for investments.
All right. In the pecking order, Mr. Choksey, if you could just give out the names out there for the entire IT space. What would you like in large caps? Because Tech Mahindra and Wipro would be reporting in the numbers today. So the pecking order, please.
So I think I'm more convinced about TCS Infosys winning some of the large deals. And these larger deals are giving them visibility of next 4 to 5 years. So that is where probably I think I would remain more convinced, and probably for capital protection purpose, I would consider these two companies as a priority order number one. Thereafter, it would be followed by Tech Mahindra and HCL Tech. But as I said, that I think for me, capital protection at this point of time is more important, and at the same time, seeing the opportunity to earn around 20 to 25% return out of these two stocks, which are corrected on the price. And I believe that the fundamentals are in place, and probably I think they will shape up well as the year progresses further.
All right, Mr. Choksey, I would also want to ask you about from one defense space to other the defensive name out there, you know, the entire FMCG basket. HUL will be reporting in the numbers today. Thus far, we've seen Tata Consumer Products doing pretty well. We've seen Nestle holding up with revenues at 10-year high. A, how do you expect the numbers to be for HUL? And B, are you drawing some amount of valuation comfort from them right now?
So, frankly, I think most of the FMCG companies are now getting support of lower prices, and as a result of which, lower input cost is giving them margin protection. So, up till now, the worry was that the higher cost affecting them on the margin front, that particular worry is gone. Second most important observation out here is that most of the FMCG companies are now finding themselves more comfortable reaching out to tier 2, tier 3 cities. As a result of which, I think the consumption is on the rise from tier 2, tier 3 cities. Saturation is largely seen from the metros, but I think if you see the inside India, probably you are finding higher amount of consumption pattern continuing. And that's where the likes of Nestle, likes of HUL would probably show relatively better performance because of their ground reach, which is far more superior. In my viewpoint, I think the food category of business is possibly suggesting higher amount of growth traction, as also could be seen from the results of Tata Consumers, even Nestle for that matter. I would think that the HUL2 would have the higher amount of growth traction experienced in the food category segment particularly. So remain relatively more comfortable with FMCG space. I'm not too sure whether the valuations are equally attractive, but FMCG companies have always remained expensively priced. So if you are considering 15% kind of a return as a modest, a good return for your portfolio, maybe I think these companies do offer this opportunity. And particularly during the corrective prices, whenever the market offers, I think it is a good time to buy into them because the fundamentals don't get changed even when the market price corrects. So I think that is where probably I would consider my buying preference into FMCG in the corrective markets.
All right, Mr. Choksey, I'd also want to understand about the finance, the banking BFSI sector right now. Axis Bank is expected to come in with the numbers today. And the lender may report some amount of losses due to write-off in the Citi deal overall. How do you look at the numbers? Because ICICI Bank reported splendid quarter out there. HDFC Bank was steady set of number. What's expected out of Axis, and how are you looking at the whole space right now?
So I think within the corporate sector banks, HDFC Bank, ICICI Bank, even yesterday IndusInd Bank, each one of them have come up with the numbers, and even Bajaj Finance for that matter, which is leader in the retail category. all of them have come up with numbers which are suggesting that the lending business is quite robust, particularly I think on the retail side. And companies which are managing the liability side well, probably I think for them the better performance is definitely guaranteed. In my viewpoint, I think even Axis holds that particular possibility because having corrected a lot of their what you call, I think the books as far as I think the previous quarters were concerned, I would think that now the company is relatively better positioned to report steady and better growth comparatively. Even if I think some one-time write-offs are required to be given, I think market has fully discounted most of them. So I would rather believe that I think the banking sector is promising to grow at a steady rate of growth of around 20% rate growth in the loan book, particularly the corporate sector banks. That is where probably I will continue to remain invested, and I think the opportunity is there when the market gives you correction. So if till last 2 months, I think markets were in corrective mode, and many of the banks and NBFCs were available at corrected prices. Today they have recovered, but in my viewpoint, I think should market give some correction, I think that would be a time to buy further into banking stocks. I remain convincingly bullish about banking story for India for next 3 to 5 years.
All right. In terms of Axis Bank, if you look at the fourth largest lender, it's expected to report on a loss of around 5,487 crore in the quarter due to integration with the Citibank. There is an extraordinary expenses out there. So that's the one which we are clearly keeping an eye out on. But Mr. Choksey, at this point of time, apart from the banking, apart from FMCG and apart from IT names, these are the ones which have reported their earnings. Anything that looks interesting and should be on the radar right now?
Auto and auto ancillary. Because India consumption story continues, and in the auto, some structural changes are happening. On one side, a commercial vehicle segment is experiencing scrappage of vehicle law implemented in this financial year, and as a result of which additional demand for next another 2 to 2.5 lakh vehicles coming up. The likes of Eicher, like of Tata Motors, likes of Ashok Leyland, they definitely remain relatively more stronger than compared to their previous past. So from that point of view, I would think that these companies are looking reasonably good. On the other side, electric vehicle is driving the growth for the passenger vehicle segment particularly. And each and every company worth its name is having some product offerings to talk about in current year as well as in subsequent 2 to 5 years. So from that perspective, the journey has just begun according to me. And one who gets into this journey early probably would make good money in next 2 to 5 years from this particular space as well. So we remain convinced about the story unfolding on electric vehicle side and the demand continuing from many of the auto manufacturers. Two-wheelers in particular, I guess I think the bottom is already hit, and probably we are seeing the recovery now in domestic market. Uncertainty in the export market is largely due to the currency downplay which is happening in some of the African countries particularly, which is affecting likes of Bajaj. But in my viewpoint, I think that situation is arrested and maybe I think some amount of recovery can be seen. So auto as a structural story, I think is looking relatively more convincing than before. And so would be the situation with most of the auto ancillary companies who are catering to their OEM customers in a larger way. So from that perspective, I would remain convinced about auto and auto ancillary from the investment perspective.
All right. Also, word coming in, or the final word coming in on the Bajaj twins right now. They've been the top gainers on the list. Bajaj Finance has reported good set of numbers. CLSA came up and said that it's almost a Kohli's regression out there and Dravid's defensiveness for the entire company. But how are you reading into it, and what's your take on Bajaj Finserv?
In fact, I think they are one of the best sustainable growth stories that one can argue for in our markets. Bajaj twins basically are having a steady growth model to follow. They don't give jerks in quarterly results. They are more or less steady in their growth program. Each and every vertical that they have taken up in retail lending, particularly Bajaj Finance, I think they have created a minimum economic size portfolio for each of them. And as a result of which, I think they generate maximum amount of business out of them. So I remain pretty convinced. In fact, market was a little unkind in last 2 months when they probably punished this kind of companies on valuation front. But that was largely due to the exit of some of the FPIs or the traders ETF, I think from the portfolios. They sold these companies, but that was an opportunity to buy according to me. Today also, I think the stocks remain pretty convincing and the story sound reasonably strong. So I would stay invested into both the Bajaj Finance as well as insurance business of Bajaj Finserv. They remain relatively more stronger and convincing to me.
Mr. Choksey, I completely take that point on board. There was a significant selling coming in from FPIs, but this was just from the perspective of the emerging market basket, and finance being one of the top place where FPIs have been invested. It saw some amount of outflows on account of that. But I agree to you when you say it's really a steady set of numbers out there and the momentum has been going. But Mr. Choksey, thank you so much for taking out the time and speaking to us this morning. Thank you so much. Well, with this, it's a wrap, and goodbye from the entire team who puts this piece together every morning out there for you. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.